it's Clint here from AXTON Finance, and I'm here today with Jay Warnak from the Glen Waverley Ray White office. Thanks for coming in, Jay.
Thank you.
Excellent. Jay, as we discussed on the phone earlier, I thought it would be great to have a chat with, or chat to our clients just with regards to the, the concepts around relocating, buying another home, upgrading, stress, or hopefully the lack of, but the process a little bit from the finance side of things and a little bit from the real estate side of things.
Absolutely.
And I guess any sort of strategy like this starts with a plan and getting good quality advice.
That's right.
And we'd like to think that we're two guys that you should be having a chat to with regards to getting that initial advice around what your options might be if you're looking at relocating. So it usually starts with us, a conversation around the finance. Clients are usually concerned around what happens if I buy before I sell or sell before I buy? Do I need bridging finance? What do the numbers look like at the end of this equation?
What is bridging finance?
What is bridging finance? Well, absolutely. So it's a buzzword. Everyone hears the term. And all it means really simply is that the bank is lending you the peak amount to pay the full purchase price of the property that you're buying, and enabling you to only essentially pay for your current mortgage. And the bank capitalises or gives you an amount of interest, usually up to around about the 6-month mark, that enables you to not have to pay such a massive amount of interest. It does accumulate, it does add on top, and you can be carrying a fair degree of debt during that time of bridging. And bridging finance is usually required, of course, when you've purchased and settled that property before you've sold and settled your current property. And it can end up being quite expensive because the banks assess you on what they call the loan to valuation ratio of both the current value of your asset and the home that you've purchased, and the debt that's on your current property and the debt that you need to buy the new one. And if that ratio is above 80% on what they call the peak debt, you pay mortgage insurance on the whole lot. And that can be very expensive, like insanely expensive. So a bit of a conversation with your broker can really flesh out your options as far as how the finance can be structured. You can get same-day settlement negotiation because that's quite regular. You'd see it all the time. We do it all the time.
Absolutely.
And you can work out what your plans are around, like the settlement terms. Settlement terms aren't set in stone.
No. And when you start a campaign.
Yeah, when you start the campaign.
That's right. And what sort of campaign? Which campaign gives you more certainty or confidence around the certainty, whether it's private sale or auction. Obviously an auction could, if it just gets passed in, it can become a private sale.
Yes.
And for some people, the risk around that, they feel, depending on who they've spoken to, might be too much, might go down the private sale.
Another important concept is having the deposit ready. So, to go and buy the property, you need to pay the 5% or the 10%, usually 10% of course. And you need to have that liquid and ready to go, and just getting the loan to be released from the current equity in your property can take a couple of weeks. So it's not something that you just want to leave to the last minute, or you can get a Section 27 from the deposit of the sale. So
on your own property,
Section 27, another buzzword used a lot. What's a Section 27, Jay?
Essentially, it's the purchaser's conveyancer or solicitor doing a credit check on the vendor, and if they're happy that the property that they have purchased of the vendor is in a financially responsible position or sound position, there's no risk to them to release the funds to the vendor. So then the vendor can go ahead and use that money on their purchase. However, that isn't always a quick process. I think anecdotally it used to be quicker, but now it could potentially, it's a bit more complicated.
It gets slowed down by the lenders usually.
That's right.
Yeah, getting the consents and the letters.
That's right.
And the conveyancer usually helps.
That's right. And people who bought and sold a long time ago who might have been used to it being quick, I now have to often tell them, look, sometimes it can take up to 28 days, assuming all the ducks are lined up properly. So it's important to know that.
Yeah, exactly. So I guess, just a couple of these initial points are really, it pays to have that plan, those conversations at the start to work out what your strategy is going to be, and not just have that rush of blood to the head.
That's right.
Because that does happen from time to time.
Absolutely. And often it's because of the process that a family member or a friend has gone through, and we assume it can be replicated for us. And that's where the advice is paramount.
Yeah, absolutely. So if we're thinking about like getting your home ready for sale, I mean, there's all sorts of things, and we could talk about this for hours. But if we were to sort of cut this down to a couple of minutes and talk about a couple of key points, there's concepts of like staging a home now. And there's another buzzword. So staging a home, getting your home ready for sale.
That's right.
Tell us a little bit about that and the ins and outs of that. And
the reason that at the moment is and it will be so crucial, staging and presenting your home, is we have now a buying audience that is so, they're being so digitally stimulated by property images and so forth, and they're all top notch. So they're no longer a market that can visualize what the potential is. So you almost have to spoon feed them. And they're so used to seeing display homes, as an example.
And they always look immaculate.
They look immaculate, absolutely. Yeah. And they come to a property, it might be a perfectly great 25, 30, 40-year-old house, might have some really good character. But if it doesn't show them what a bedroom or a kitchen or a living area or an outdoor alfresco area can be for them, then it can impede buyers from putting their hand up or putting that offer forward.
Is it worthwhile to spend the money on the interior decorator to get the furniture and rent and go to that hassle and expense?
For the right property. And this is where it's important, just like with the finance side of it, hopefully I catch vendors prior to them having spent money. Yep. They'll come in, they'll know me locally or wherever, and they'll say, Jay, we're looking to put a house on the market. What should we do? And I like hearing that sentence, what should we do? It means they haven't done it yet. And hopefully I can steer them towards spending the money wisely for the current buying market.
So you really want that bang for buck. You don't want to, I guess you'd see
don't want
all
dollar
sorts.
For dollar.
Yeah. Overcapitalisation.
That's right. And I might go into a property which someone, it's their most valued possession, but I might know that the current buying market, given the zoning of the property, that it might well be a developer who buys that property, and they might have put $30,000 into a kitchen and bathroom, and then they find it's wasted. Absolutely. In saying that, there's other people where, yes, it may well be a developer who purchased the property, but I might say, but we still want, your mum and dad purchasers or your investors to still be in the running, so we just want to make it that little bit attractive to them as well.
Is there a rule of thumb? Spend $1, make $1?
No,
spend $1, make
$2.50. $2.50 and above. Okay, but things like making your house more inviting from outdoor lifestyle as well.
Yeah, I was going to say, do you spend it inside or outside?
Well, this is where the agent comes in, because every property, every suburb, depending if there's local cafes, if you've got the views of the winery, and if you've got nice parks, ponds, things like that. That's where you have to make a holistic decision. It's not a blanket rule. And again, looking at your zoning, your council regulations, things like that helps you to some degree tap into the mind of a potential buyer, but again, without wanting to make too many assumptions either. So yes, you want to at least double your money, otherwise it's better off money in your pocket for your next purchase.
Yeah, absolutely. It's good advice. When you get clients as well, when they are they're going through those stages of evaluating, okay, I'm going to sell my home, I'm going to speak to 3 agents.
Yes.
Clients can get bamboozled because the price is being pitched to them up here.
Yes.
The commission's down there.
Yes.
How should home vendors sort of approach that? I'm being sort of swayed on that information.
Look, it's the same process I would suggest. When you're buying other products, is speak to a few. And use your own intuition, gut feel. So gut feel and referring to family and friends and who they've bought and sold with as well, and whether they've had a good experience or a bad experience. Rate My Agent is not too bad. It's an independent source of reviews from people who've used an agent.
Yep.
But I think
that's really interesting, because people now are looking for that social proof.
That's absolutely right.
That they've got the experience, they've got the follow up, they've got the good communication.
That's right.
And really important.
Well, that's the other thing I say. Especially if you're speaking to 3 agents, and we'll all talk about good communication, which I think is absolutely paramount. But saying it and doing it are 2 different things. So I often tell a lot of my potential rentals when I'm in front of them, if they've got family and friends, I often work on referrals. So if family and friends say, look, what should we do? I always tell people, get someone who an agent hasn't met from your family or circle of friends to go to one of their other opens. Don't act overly interested, but don't act disinterested. Just go to the home, give your details, leave, and then see how quickly that agent communicates with that family member or friend. Because what you don't want is an agent who just assumes someone's purchasing power. Because in this day and age where we've got so many business owners and entrepreneurs, you don't know what a millionaire or a billionaire or someone who can afford your house well and truly, you don't know what they look like. And you want an agent who's going to extinguish every possibility in every buyer. So that when they come in, they're communicating with that buyer very quickly, very promptly, very politely. Because you do want an agent that buyers feel confident and comfortable with dealing with when they're trying to make a transaction on your property.
Yeah, absolutely.
And there's a wide gamut of agents, like there is in any industry. So whoever's got a good bedside manner will always do well.
And I guess, Matt, we've covered off on a lot of topics, and I'll ask you one more question just
Sure.
before we sort of sign off. What's your take on the market in the year ahead, particularly in the Melbourne market?
Again, we could talk about this for hours. The Melbourne market is still very strong. It does vary area to area and the type of property to the type of property. School zones, east versus west, investment versus place of residence, all make a big impact. But as a whole, Melbourne market is still very strong. Properties are still, we've got a great clearance rate still. I think it's about 78%. So it's still in the 70s. But for investors or for homeowners, there's a lot of options now, whether they buy house and land, or we're looking at apartment living. Melbourne's still in a positive gradient.
And I guess we see it as well with the sorts of clients that our investor clients purchase and owner occupiers, is that scarcity value.
Absolutely.
Is really what drives a lot of purchase decisions and gets the good prices. If it's well located in a good location, right. And it ticks a lot of those boxes, which of course we all know about. It really puts a client in good stead over the longer term.
Absolutely.
So that's really interesting. Well, look, thanks very much for coming in today, Jay.
It's been a pleasure.
Yeah, absolutely. And I think perhaps we should do this again.
Hopefully.
Yeah, absolutely. Well, Jay's details are down there below, and of course you know mine. So I look forward to speaking with you all again soon. And thanks again, Jay, for coming in today.
No worries.
Cheers.
Thank
Thanks.
you. Bye.